How does war affect the stock market historically? Should you buy or sell when you hear the sound of cannons? Let's look at how stocks have performed during conflicts and wars. On the screen, you'll see how the S&P 500 has performed after major conflicts. Perhaps surprisingly, the max loss after such events is not large, only 20%, which happened after Pearl Harbor. In fact, some studies show that stock markets tend to have less volatility and better returns during wars and conflicts than during peaceful times. How's that possible? One explanation might be that wars stimulate government spending and economic activity. However, we suspect the main reason is that wars are often anticipated and priced in by the markets before they start, so the actual outbreak doesn't cause much surprise or panic. For example, on the screen, you see that U.S. stocks already had fallen prior to the attack on Pearl Harbor. And just a few weeks later, the stock market rallied and it didn't look bad. Dow Jones rose over 60% in real returns before the Germans and the Japanese surrendered. Another interesting fact is that volatility drops during conflicts, which is very counterintuitive. On the screen, you'll see defense expenditures and stock market volatility. It shows an inverse relationship where higher defense expenditures are associated with lower volatility. Of course, not all wars are good for stocks. Wars that are fought on home soil can have devastating effects on the real economy and the stock market. The U.S. has been spared for conflicts at home since the Civil War. Germany lay in ruins after World War II, and the stock market was closed for several years. When it opened in 1945, it opened 90% lower. The same goes for Russia, where all was lost in 1917 until it restarted in 1991. Moreover, wars can affect other asset classes differently, such as gold, oil, or bonds. For example, gold has several times spiked on news of war, for later to pull back, as it can be seen on the chart on the screen. So in conclusion, how should investors react to news of war? The answer is not simple, but as a general rule, if your local market is not part of the conflict, it might be wise to follow the famous advice of Nathan Rothschild: buy to the sound of cannons, sell to the sound of trumpets. That was all for today, but please like and subscribe if you like this video. We publish hundreds of back-tested and documented trading strategies on our website, quantifiedstrategies.com, and YouTube.